Please, if you
All right, then you must understand
exactly
that if you trade SMC, you're actually trading smart money footprints. Okay, so you're concerned about what their footprints are, where they're heading to, and where they're willing to react from, not where you want them to react from. Okay, most
to
times we overly
react. Yeah.
most times we're overly concerned with where we want them to react from that we forget to remember that we are actually trading their footsteps. Okay, and
Yeah.
there's a hidden base inside of here. Okay, you know that, right? I don't know if you know about hidden bases and all of that and supply and demand.
Hidden basis.
Okay, so there's a
I
hidden
I
base.
don't have that.
All right, then we'll just try to trace it on the lower time frame. But there's a hidden
Okay.
base inside of there. Okay, that was reactive from this zone. Okay, and the idea is that this is the last
Mm-hmm.
this is the last point of demand, right?
Yes.
That was
Yes.
violated, right? So it means
Yeah.
this was actually the last point of demand that was violated in this structural range. Okay, by structural
Mm-hmm.
range, I'm referring to this story. Okay, so if that was the last
Okay.
point of demand that happened and then was raised by this guy, right? It means something actually
Mm-hmm.
caused that demand failure. Okay,
Mm-hmm.
something actually caused that demand failure. This was the last point of base. Let's see it clearly in the 1 minute time frame.
Okay.
Give me a minute. Let me get that for you.
Okay.
It's still behind right here. Great. So you
Okay.
can see it, right?
Yeah, that's it.
All right. So this
Mm-hmm.
was the last point. This was the last point of supply, right? That sponsored the
Mm-hmm.
rally that took out this area. Okay.
Mm-hmm.
So not this guy that you guys had in mind. The guy you guys had in mind around 15, 17, 12. Okay, marked here
Mm-hmm.
was not even anything. He had no business with price. Okay, it was liquidity to be cleared because he had paid his part already. Okay, we had this grab on liquidity internally here, and then we had a shift of
Mm-hmm.
market structure. So price actually presented this, then retested, and then continued. So automatically, this guy has done its work. It has to be rinsed as liquidity. So this is not an area you'd be expecting to buy from. That is not a flip zone. Okay, the most current flip zone is the
Okay.
flip zone that took out the structure on the higher time frame. Okay, which is this guy that we have inside of here. Okay, if you're not
The
used to
second box.
exactly, if you're not used to intraday time frames, you will not be concerned with this guy. But then with my kind of setup, this was a very nice area to sell from, okay, because it grabbed liquidity, right? And then it broke,
Wow.
structure, right?
Structure.
So my target entry point would be the next point of liquidity upon this. So we're looking forward to seeing price react from here, not even the
Go
other.
back to that area.
Okay, so I'll not even be looking at the other block. So you see,
Like
price did not even get
price to go back there.
it did already. I'm just looking for price to grab this liquidity on this side. That's my only concern. Okay, this is my last point of buy before this drop, right? Okay, so I'm just looking for
So
price.
what high? Like the high, is it the candle? You mark your highs from the candle.
This is my high that grab
Oh,
liquidity.
okay. Yes. Okay.
As
Yeah.
soon as it
Yeah.
grab
Yeah.
liquidity and shifted structure, it is a valid intraday point to trade from. Okay, and then
Yeah.
this guy here becomes my point of liquidity. Okay, fair value gaps must not be filled. Price is not interested in filling fair value gaps. The only reason why price is even interested in an order block is if they have orders at an area that needs to be picked. Okay, so price must not touch an order block. So I don't trade
That
order blocks. I trade just liquidity. Okay, so this was the point of liquidity.
okay. You don't trade other
No,
blocks.
I don't trade order blocks. If price decides to mitigate fully and tap an order block, fine. But then I'm only concerned about seeing my what's it called? My shift in structure after the grab liquidity. So if they decided to come in
Okay.
deeper to grab liquidity before shifting structure, that's their problem. I'm only looking for a shift in structure after my liquidity has been grabbed. Okay, so we had a nice
Mm-hmm.
shift. We had a nice shift in intraday structure here, right? Because this is fine intraday structure. After this guy,
Yeah.
we
It
had
broke
this, right?
structure. Yeah.
Then we had this, and then we had
Mm-hmm.
this, right? So
Yeah.
at this point, my intraday structure was shifted already. And then I'll be looking forward to seeing
Yeah.
corrections. I'm looking forward to seeing corrections into this area to grab liquidity as well. Just like he grabbed liquidity internally from this guy. All right.
From that area. Yeah.
I'll be looking forward
Mm-hmm.
for a grab of liquidity internally from this guy. Okay, and
Why exactly that place? Why that place exactly?
that's my next point of liquidity. How do I explain this to you?
I would like to know why you picked out that place.
Okay, I would have picked this high. I would have picked this high. Okay, but then everything I see inside here is transfer of funds, mitigated, mitigated, mitigated. So automatically it means on the much more lower time frame, there's a trend line liquidity resting here.
Trend line. Okay.
Okay, that should be messed up. So once that is messed up, it means I'm willing to see what price is doing after that. Okay, so if I want extra confidence, I can also wait for a shift of market structure
More.
from this area.
The way
Yeah,
the way you are seeing these things is just funny because I'm just not seeing it because I don't
it's
have the
because
eyes yet for the
yeah,
way.
yeah. It's because I'm used to my intraday time frames already. That's why. Okay, so the only sense price came here is to clear this trend line liquidity, mess it up, and then continue.
Mhm.
Okay, so if you are not
Mhm.
comfortable with getting your entry, let me see where we can get a new entry, right? Somewhere that's served for. All right, great. Price also gave us something good. Okay, so on the long run, we had price come here to mitigate this area, right?
Mhm.
Okay, so we had here. Let me zoom it out again. This is another grab on liquidity, right?
Mhm.
And this
Mhm.
here is a shift of market structure, right?
Obstruct. Yeah.
Okay, so I'll be expecting price to induce this high. Okay, this is my inducement high. I expect price to take this out because that guy did not grab any liquidity. Price did not take it out
Mm.
with this guy. So it means
You did
this
not.
guy,
Yeah.
exactly. So it means this guy is also an inducement high that will be cleared. Let's see that. Let's see. So let's extend this a bit and see what happens. Okay. I still didn't get to it exactly, but then I would expect this guy to be cleared. So probably after this guy had happened, I would have shifted this to the week of this guy.
Okay.
So for
And you
some
see
reasons,
exactly.
yeah, for
Yeah.
some reasons, it did not give me the fine entry that I want. But then it shifted structure at this point, right? Can you see the shift of structure
Mhm.
here? Okay, so if I did not get a confirmation entry at
Yeah.
this point,
Yeah.
after this shift of structure, I would have been willing to engage from the high of this guy, right, to the high of this other guy
Mhm.
where I have as my extreme. Okay, I'm concerned about this guy.
That's like
I don't know how you guys calculate your pips on gold. I don't trade gold, but it's 845. So this is 8.45, right? Or it's 4. I don't know. How do you guys calculate your pips on gold? This is
okay. That's
0.8.5.
about it.
8.45 pips, right? Yeah, I trade basically Euro USD. So I've been looking to
Mhm.
I'm looking
Mhm.
to short this from this point. Okay, and then I'll be targeting this area. Yes, I'll be targeting this particular liquidity. Okay, to be raided or tapped into
What
whatever price
price is
comes
that?
to. Okay, yeah, that's exactly what I've been targeting. And it was,
Price is that?
what did you say? That's 1697.640.
Okay. Okay. 1697. Okay.
Okay, so price just did that and then started a new rally to the upside. Let me see if he finally cleared this guy because he was supposed to clear this guy. He did not for some reasons. Okay, that's that. But
Mhm.
then this would
No,
have been my first point of
gold.
target.
Gold actually has a mind of its own.
Yeah,
Sometimes the way it works,
I've
it
observed
doesn't respect certain things.
I've observed that, but the structures are quite clear. The internal structures are quite clear. Okay, so after this guy was violated, let me see if we got a shift. Okay, after this guy was violated, it means I'll be looking for this liquidity. Now, I'm not marking the other block below the fair value gap. That's basic retail. That's basic smart money, and then could be a smart money trade.
Mm.
Because if I'm doing that, I'll be marking this guy to get a reaction from which price actually did. Okay, but then I'm only concerned about the shift. This is a grab on liquidity, right?
Mm.
This is a grab on liquidity here.
Okay, so if you're talking about the market shift at that point you put,
Yeah,
that's not like the low. Is that the low that we are going to use or this one below?
this is my first instance that tells me price is changing because
Yes.
this grab on liquidity, and then I have this break of structure above this
Break
high.
of structure. Yeah.
Okay, so it means if I want to look at this from the other standpoint, I have a perfect flip zone in this area. Okay, I like to look at price from whenever I see somewhere that gives me a clear setup. Most of the times, 80% of the time, if you look at it from the area of the already existing trend, you'll see that it's a flip zone because we've had clear lower highs, lower lows, right? And
Yeah,
had
lower highs.
liquidity with this and all of, okay, and then it suddenly came to this point, and then it violated it, right?
It
So
violated
it
it,
means,
yeah.
in the real sense, if I was going to sell this, every other trader who would see this would want to trade in line with this trend, right? So they will consider this as a grab on liquidity, right? And then a break of this structural low. So they'll be expecting price to come into these points, right, for further down move, right?
Okay.
Once that fails to
Okay,
hold,
so
yeah,
yeah, okay, no, go on. I wanted to ask something
okay.
before I forget.
Once that fails to hold, it means this supply has been violated, right?
Violated, yeah.
Automatically, we are looking at a flip zone scenario. Okay, the last point of supply that was failed, okay, transferred power to the demand that caused the failure. Okay, so, and this was the last point of liquidity before the demand. So prices has to tap into that
Yeah.
area. Prices have to tap into that area and move. Now, if I go to my lower time frame, I have a very nice confirmation on this area as well. Let me box this. So I will not look for it too much. Then let's go to the 30 seconds and see what
20 seconds, God. These time frames, like, I don't even know how to trade it before now. Like,
Okay.
I just do like 30 or 1 hour.
No, really. Don't worry, over time you will. Let me pinch this so I can.
No wonder you get good entries, like very sniper, good, mad entries on your trades.
I trade on all time frames, so I can't be wanting to stick to a particular time frame when I have juice waiting somewhere else for me. Yeah, and then I like my lower time frames much more than all of those anyway. So let me get that for you. Just give me a minute.
Okay.
I would have marked the date. I forgot to do that, but I know it to be somewhere around here. So we just have to trace it slowly.
Trace it back.
Yeah, give me a while.
Wow. Wow, wow, wow. It's really amazing how you see these things on the lower time frame. God, when?
I spent
God,
so much.
when? I
I
really need
spent.
to.
I spent so much time on the lower time frame. That's why it looks like, regardless of how easy I try to make it sound, it's not as easy as it sounds. It's just time.
As it looks, yeah, it's not because like you need to really have good eyes to see these things. Like,
Okay, this is what
1 minute.
I would do. Okay, sorry, this is what I would do. I will cut the chart from there, so it will be a lot more easier for me.
Is there for you to see? Yeah.
Yeah. Or just hold on.
Like 15 seconds is actually
I think I can get it.
wait, where was that?
What was that price point again?
That was around was that the low 1790 something?
17. That your okay, this is 16. No, this is not the low. I think it's the next day after this one.
Is this still the 15 seconds time frame?
Yeah. I'll get it.
Okay, okay. I thought you wanted to fish it out
Yeah, I've
from the
seen it.
higher time frame.
I've seen it already.
Okay, that's it. Yeah.
Okay. So let me take this out so you can relate it what's here. So on the 15 seconds time frame, right? Let me feel this candles if they're open. Okay, it's open. So I have a clear grab on liquidity, right?
Yeah.
And then a shift above these structural points, right?
Mm-hmm.
So I just need price to take out the internal liquidity. Okay, it doesn't have to feel it. It doesn't have to feel it. If I'm waiting for a fill, I'll be waiting for this order block to be tapped. But price does not need
Yeah.
to. The same thing I explained. Price does not need to come to your order block. It does not have any business with the order block, except there are orders that needs to be taken inside of there. Okay.
Yeah.
And then if there are orders there, fine. But then if there are no orders, fine. So if I'm engaging in this trade, I'll just be looking out for taking this from these points, right? That I have marked down to below the order block. Okay, and then extend to the upside. Okay, so, and then I'll be targeting this next high to be cleared because it should become liquidity already.
Liquidity. Yeah.
So that would be my target one. And then the overall high that started the move from this guy, okay, to be cleared as well as target two.
Damn. Like this is getting so interesting, like trading these lower time frames, because you can get a good risk to reward this way.
Yeah, yeah, yeah. It's always fun.
It's fun. You get a good risk to reward.
It's always fun. So let's see. Let's go back to the 1 minute. Let's go back to the 1 minute. Let me see what price has done since after then. Okay. All right. So the essence of all of those things, right? All of this drama, the essence of that was to come back here to grab liquidity from this high. Okay. If I zoom in, I could see a better points I'm willing to use, but it's fine. Okay, grab liquidity from this high. Let me extend it to the exact guy that did the work, and then wait for my structural shift. Okay, so let's see that. Let me go down a bit. Yeah.
Okay.
Okay, if I want to follow this block particularly as a point before this guy messed up, right? I would have seen reasons why I would have sold this trade back to this area, but let's just deal with the initial one when this inducement high, because after this guy did its work somewhere inside of here, it became inducement to be cleared.
An area of
Yeah,
interest, yeah.
yeah. So at this area, I'll be looking for two things, right? My grab on liquidity and shift in structure. Okay, so this place got into this place. I don't have a grab on. I can use this for a grab on liquidity and then approach from here. Okay, but so I would have done that. So let's assume I got in here and then I was stopped out already on a break even. Okay, because I would have been willing to enter this trade from this point. I would have been looking to enter this trade from this point and just set this above this high. Okay, so and I take partials at 5 arrow and let the rest run. So this was already a 1 to 8 scenario. Okay, so yeah, 1 to 9. Yeah, this was a 1 to 8.97. So I would have taken partials and then I would have been stopped out. Then the next price action story would have begun, right? So price came here. All right, grab liquidity from this high. Okay, and then shifted this structure, right? I would have not been willing to engage. I would have not entered here because this demand order flow is still very much intact.
It's still there, yeah.
Okay, so when I see a range of that demand, I would be looking for price to either use this high or use this extreme. Okay, because this will be my new flip zone, the guy that sponsored the whole story, right? Good. So when price gets to this point, I would not be entering immediately. I also want to see a grab on liquidity and shift in structure, right? So price got to this area and there was no manipulation because this high was not manipulated. It's not interesting to me. Okay, I want to see a clear manipulation. Okay, take it out before responding to it, right? So if there was no manipulation on the high, it's not interesting to me. I would not be coming in here. And then price continued building up this. When I begin to see this build up, I know somewhere a sell is loading that I'll be willing to trade from. Okay, so I would have waited. I'd have waited for this actual manipulation to clear. Okay, so all of this has been cleared now as my shift in market structure. Okay, then I will now be willing to trade from the idiots that sponsored the shift.
The other block.
Which is this guy right here, right?
That's another block, right?
Yeah. So I'll be willing to trade from this guy. Okay, so let's see how many barrel I would have gotten on this before it was messed up. That's one thing with the intraday time frame. Anyway.
Wow.
Okay, so already this is a 1 to 9, and I take partials on 1 to 5 and let the rest run. So this is a 1 to 9. So it was still a good trade for me until I have price. So okay, it did not take me out at this point, right? Because it came here before this drop happened.
Yes, and it came for that low by the left.
Exactly. So this is a 1 to 13. This is a 1 to 13, and the essence of this, from my view, is to clear this guy. Okay.
This liquidity.
So once I see this guy cleared, I'll be expecting a buy move to. I'll be expecting a buy move to occur, so I would not even be in this trade. So this was a winning trade. This would have been a winning trade for me. Okay, then let's see if we had
now
I
see why people like lower like time frames, because these things, like, it gives you a good tight stop loss. You get a tight stop loss.
People like lower time frames because of the risk to reward. But then 90% of people who have seen trade lower time frames still trade lower time frame with the same regular SMC logic. You'll get stopped out most of the times. And then even if you still end up, because we're trading risk to reward, you'll still have more wins than losses, because very quick risk to rewards, very quick trades, and then you're on your way. But then if you understand the concept of liquidity, it will make things a lot more easier for you. It will make things a lot more easier for you. Like what happened
And I
here,
see
right?
that you notice you focus more on just break of structure and liquidity.
Yeah. Liquidities and inducements. That's what I trade. So after this move happened here, this is my liquidity point. Okay, this is my liquidity point. Though I would expect that price should come into this order block, but since I don't trade order block, I refuse to have my mind fixed on order blocks. Okay, so I'm not even buying I'm not buying anywhere here till I see a shift in market structure. Okay, I see a shift of structure. So let's see where we actually had that structural shift. Something that would have led me into buy. Okay, so blah, 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 blah. Price tap this, and then move. So I'll be willing to engage from anywhere below this low. This is my area I'll be considering. Okay. As soon as price grab this, I would have been looking forward to buy. So this would have taken me out on the 1 arrow. Okay. This would have taken, except I would be wise enough to put my stop loss below this low because of this guy.
Below,
Okay.
yeah, because of
Personally, I get too stingy sometimes, and I just want to lock it maybe somewhere around the 50%. Okay, that's what I do. I just take the 50% of the block. That's the max I can go if I'm setting my stop loss on the intraday. Okay, so that's where so that's where we have that's where I will have my stop loss, and then I'll target this high to be cleared. Okay, I'll target this high to be cleared as my first point of liquidity. Okay, so this was a nice 1 to 4. Okay, so if I had held after that, and okay, I certainly had my 1 to 5, I would have taken partials already. Before price did its thing with this high, I'm certain, induced this high. Okay, and shifted structure. So after price used this high, did this and shifted structure. This was a follow through setup. Let me see if I had a reason to enter here on the left. Price left me. Okay, but then if I do my lower time frame thing, I would definitely see an entry here. So once price shifts structure, once price taps my area of liquidity, I drop down. If the liquidity is grabbed on the 1 minute, I drop down to 15 seconds or my 30 seconds. Okay, if it's grabbed on the 5 or 15 minutes, then I drop down to 1 minute, depending as the case may be. So since we've grabbed liquidity on the 1 minute time frame, I go to a much more lower time frame, and then we escape from this zone, right? So this is my last point of buy. Let me take this call, please. George.
Okay.
Alpha, I will take one short class. I'll call you when I finish. Okay. All right. Thank you. All right. So this is the last point of buy, right? That was in place before the rubbish that happened. Okay, so prices have to come back here and fill this. That's the only logic behind this. Okay, this is the follow through setup, shift in market structure before break of structure. Okay, so this is the shift. Price failed to create a new high. Okay, but at this point, demand order flow was still in check here, so that caused this reaction, right? So once that failed, I will looking for anywhere above this high. Okay, anywhere above this high, as little as it may look. Okay, with a
small,
for a buy that did this rally. Okay, then I will also target this liquidity points to be cleared. Okay, and then I've seen another reason why price could have trapped me for a loss. Okay, so this is my next grab on liquidity. Okay, let's see who sponsored that. So this is a demand failure, right? So if I'll mark this out as a demand that failed, and I'll be concerned about the guy that sponsored the demand failure. So once price broke below this, I'm looking for the guy that sponsored the failure. Okay, so I have 2 points of interest I'll be willing to trade from. I'll be looking at this guy, this particular guy, to sell from because of this grab on liquidity here and shift of structure. Okay, I would also be concerned about this guy, okay, because he grabbed liquidity from this high.
Grab liquidity there.
Okay, so I'm looking for the last point of buy inside of this guy before the dump, right? So this is my guy, right? So exactly. So I'll have my blah 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 around these highs. Okay, so price tapped into it. So I have a -1 arrow on this, and then so let's just mark that out. This is also how I backtest too. So
Wow.
I would have taken a loss on this, and then this would have been a nice one. My stop loss just above this high.
The high. Yeah.
And then where will I be
Okay.
targeting? I'll be targeting first of all this
The
to get
low.
taken out, right?
Mm-hmm.
And then so that would have been a 1 to 7, and then the next area below it. Let's see where that is. And then I would have been targeting this next point of liquidity.
That area. Yeah.
Okay, I'll be targeting this point for price to give me some sort of reaction. And then also that got taken out as well. As soon as this got taken out, I should have a new buy area around that range. Okay, sweet. I can see that already. So this went total for a 1 to 9. Okay, and then I have a new, nice. So this is my new area that failed. Okay, so this guy failed. This was a level of what demand that failed, right? So I'm looking
That
for the
field.
guy
Yeah.
that's failed the demand.
The sponsored.
Yeah, but then
Mm-hmm.
I'm concerned about the where I have my liquidity. You see this small push, this small space here, the small fair value gap here is more important to me than the other blocks. So I'm just marking this, and then I want to see the reaction of price around that area. Okay,
Okay.
and this is it,
Yeah, that is it. Yeah, I
right?
feel that.
Right. Okay, price failed to get into it, like what happened on your 1 hour time frame. So I'm only concerned about this story. For some reasons, they decided to use one of these guys. Okay, so once I see this shift of market structure, right, that has cleared all of this. Okay, all of this build up here, liquidity to be taken out. So once I see this shift of market structure below this low, okay, once I see this happen here, then it means I'm looking for my next point of liquidity that will be taken out instead of this range, which is this. Okay. And then,
That other block
yeah,
there.
I'm already seeing my 30 seconds confirmation instead of here. I grab on liquidity and then shift of this structure to buy to sell from here. And then I will be in this trade already from these points. And then I'll be
On the
targeting.
high there.
Yeah,
Wow.
targeting this area.
Wow.
And then
This
I'll
is
look
interesting.
forward to taking out this liquidity because he has sponsored this rubbish that could not take out structure. So
Damn.
it's weak.
Okay. Sorry, may I ask you, like this thing now, like do you start from the higher time frames to analyze, or you just come to the 1 minute and you seek these points that you're looking for?
Every good trader should know what's happening on the higher time frame. So I work with my 4 hour, I work with my daily, I work with my weekly. When the week starts, okay, I just need to know what's the story on the 4 hour time frame. Okay, for instance, okay, let's see the 4 hour. Okay, the 4 hour is bearish. Okay, the 4 hour is bearish, and let me see that point where we have all of those magic happening. Okay, great. Okay, this is the 4 hour point, right? For the week that we saw, right? It was bearish. Okay, and then we got to a point and we failed supply. Before then, we were at a supply point. We done 45 minutes already. Wow, time they run. Before
For the
then,
Zoom to end.
yeah, I'm surprised. We've done 45 minutes
Oh my
already.
goodness.
Okay, so before then, price was heading towards a level of supply. And then if I'm marking this from how I trade, okay, all price needed to do was to grab this liquidity, not even tap the other block, right? So once price grab this liquidity, I would not know that this supply will fail until this demand will fail until it finally failed. Okay. So as soon as price grab this liquidity, I should be looking for buys right back into this area like you did, right? But before that happened, I would trade the whole buy story that gets to this point. And then when I begin to see sign of reversal, I would trade the whole sell story to anywhere it changes. But then the sell story successfully broke this structure. Once it broke this demand, I'm setting the sell continues, right? So I'm trading both the, I have in mind that I have a 4 hour directional bearish bias. Okay. So any buy I'm taking is a mere correction. Okay. So, but then I'm trading the whole story. I'm interested about the story, the full daily cycle that happens in my trading session. Okay. So I'm just with that. It's like what we have.
It's really interesting, banks, and I don't think I want to go, but I know you have a lot to do, so I don't know. Can we have another section, like maybe anytime during the week or something?
It's okay. It's fine. I'll just try to.
Like I really need to learn this because trust me, it's getting so interesting to know that people trade 4 hours, they trade 1 hour, and then like you can just take an entry, the lower time frame, and just do your thing and leave the market. It helps you utilize your time as well. Like you don't always be at the charts, looking at time frames. It's really amazing. Trust me. Wow.
Cool.
Okay, now, so we say that now I've seen the reason why that happened. Like, but what if, okay, because what happened like that day, Friday, gold, like it surprised everybody. Like the way the market dropped, like there was no news at that time. I just feel it was like these people's fucking people up because they knew that buyers were trapped.
The
And there
CPI
was
news.
this area
The CPI news. Okay, but you mean the sale that happened that did not get
on
to your area?
Friday.
Okay. On
Yes,
Friday.
because okay, let me show you. It's just that time is not by our side anymore.
Don't worry, just
I
continue.
wanted to show you, like, if you check the daily time frame.
Yeah.
Okay, go to the daily time frame. Let me show you something. The last area. Okay, so you see that area where price like took out the sell side there.
Okay. You
like
mean on this
that
one?
16, I think that was 1680
1688.
areas.
Yeah, this area.
Exactly. You see what price did there? Why did this drop like that? Like, just drop like massively.
Let's trace.
Even though, yeah.
Let's trace what led to that.
Yeah.
Okay, this right. This is the drop, right?
Yes.
Okay. Let's color it red and then see how would have leveraged off that. There must definitely be a story as to why that happened. So, like I'll always say, instead of trading what's your bias, always try to look at what's
sentiments. Yeah.
what the banks are willing to do and then work with them. This is a very sweet setup. Very, very sweet setup. Okay, I'm seeing a very sweet setup on that sales already. If you're following the story of the, where's that guy I just marked? All right.
Yeah.
Okay, so let me take this out so you can enjoy the story. So we have here a grab on liquidity, right? And then we have a shift in market structure, right? Right. We have a simple, basic textbook approach, a root CEO to grab this liquidity. Let me zoom it so you can see my screen properly. Okay.
Exactly.
So as soon as we grabbed this liquidity, what did we do? We shifted this structure.
Okay.
Right? So where was my last point of buy? Look at this carefully. Price go here and then try to drop a bit, right? And then moved up aggressively. Okay, so it means they established new buy moves at this area, right? So it means that it means that this area is my guy, right? And then price came in to tap that and then drop. So the move even has a confirmation for the sell continuity. Okay, so this would be my trade. Okay. And then after my 5 arrow at this point, I'll just let the rest run. So I think my runner would have been running for till we got to this point.
That's like 1-2.
This is a 1-25. Okay.
Oh my goodness.
When I
That's a lot of money.
When I see this shift in market structure, right? Once I see this happen, I may have been looking to, okay, now I would not take it because this guy did not grab liquidity from anywhere. And then this guy did not still come lower to grab liquidity. So I know this is a trap. Price cannot, I'm certain this is a trap. Price cannot buy from here.
Exactly.
So I would have just let it run till I see this new guy.
A break.
Okay, this new guy. Now look at my new guy now. He grabbed liquidity from here, right? A shifted structure from here, and then a double confirmation, a shift of structure from this area, right? So once price comes to take out this guy, I'll be willing to look for a new shift in structure.
To buy.
And I will buy. And I would have been in this buy aggressively. Okay. Personally, I like to say the truth when I backtest. I would have taken this buy aggressively and just put my stop loss below this low, right? And then let me see how many arrow this round for before it was fucked. This was a 1, 2, 3. So you'd have hit my stop loss because I would not break even at this. Okay, I'll break even at this break of structure, right? But I would have not taken any partial. Once I have this break of structure, I would have broken even, but I would have not taken any partial. So you would have stopped me out at break even. Then I was looking for a continuation of the sell story. Okay, the sell story was to come back here and take out this liquidity. Okay, didn't get to that, but this was good enough. This was my last. Yeah, this was my last point of buy, right? You can see this here, right? This was my last point of buy that needed to be mitigated. So I'm always looking for that, even as I look out for my liquidity points, right? So price came that and then tapped into that and then started a new sales from Asia. Okay.
Okay.
Now you can see
So
this
here,
buy,
what sponsored this buy here?
a grab on liquidity. That's all price needs to do. Once price grabs liquidity and shift structure, I say that oftentimes. Okay, so once I see this grab on liquidity, right, and a shift of structure, once this happens, personally, okay, I would have wanted to enter from here aggressively, but then this is a equal loss. Okay, so if I'm taking this,
liquidity.
yeah, so if I'm taking this, I will look for something I can lace my what's it called? Lace my stop loss on. Okay, so if I'm taking this, I would have laced my stop loss. I would have entered from here and laced my stop loss at this area. Why I would have taken this area? Look at this guy here. This is my last point of buy. So I understand my last point of sell, right? That has not been mitigated. So I'm certain that if price wants to come lower, they will only come to grab liquidity from this guy. So that's the worst. That's the worst they can do. So I'll have my stop loss below that in case of incasity, and then I'll target that particular point I expected to be taken as liquidity that was not touched before. Okay, so this will be my first. After taking out this high, I'll be looking for this to happen. Okay. Yeah, so that's how I would have approached this trade. But then if I go lower, I would have seen reasons why something here should make sense to me. Okay, I can see a nice story inside of this area. So let me just clear this price action here. Okay, so I have a grab on liquidity here. Can you see it?
Yeah, very small though. Okay.
That's my 30-second structure, 15-second structure, and then break of structure here, right?
Yeah.
And then return to this.
To this a small other block there.
Right? Okay. And, yeah. And that's my buy confirmation. So I'll
your
be
entry.
So I'll be taking a new entry. If I was working with the 15 seconds to thereabouts, I'll be taking a new entry inside of this area. Yeah.
So, and there was also like the trend line phantom, like
exactly.
like all these, those liquidity areas there.
Exactly. And then after this had happened at this point, just like every other person, I'll be expecting all of this to be cleared. I would expect all of this to be cleared. Yes, because the only thing I have forming inside of here now is rubbish. Okay, even if we had touched before, they need to be cleared. Okay, because they have played their parts already. They become old highs and old lows and all of that. And then that is when I can now be targeting this guy.
The low. Yeah, that low. Exactly. The low that created the supply, yeah?
Exactly. Okay, so price got into that and did its thing. So this coming week, okay, I'm expecting to see price. I have less than a minute, so this call may go off anytime.
Damn, okay.
So I'm expecting to see price come back into these areas.
What areas is that?
1600, okay, and then somewhere below this area, because this guy has done its work. It may not be able to hold price, but then it's still very much